Good morning, fellow traders from each and every part of the world that you are joining us from, with, of course, our focus and nexus in the East African region part of the world. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one broker in Kenya and beyond, linking you to financial assets and allowing you to take advantage of the opportunities that are there in the financial space. Now, today is a bright Monday morning, the second day of December, which is quite interesting to look at the dynamics and the changes into the financial space. Before we dive in, I would like to comment that this is going to be a pre-recorded YouTube video, to mean that you can access this video later and possibly even save it so that you get familiar with some of the terms I'm going to be mentioning moving forward. You can find this video on YouTube at the HFM YouTube channel at HFM Kenya. Kindly visit the HFM page, YouTube at HFM Kenya. Like, subscribe, and click on the notification button so that you are not left out in future content that we post on that page from time to time. Now I'm going to give a 3 seconds moment of silence to make sure that all of us do that. Very nice. So we can move forward. Number one, fundamentally speaking, what is happening? What is the economic data being printed looking like for this week? What are we anticipating? Then we touch a little bit on geopolitical events, so that we can have a feel and a sense of market direction. What are the anticipations for us to dive into technicals? Now, as of this morning during Sydney session, for those who don't know, we have like 5 market sessions. We have the Frankfurt, London, New York, Asia and Tokyo, Sydney also. So Asia and Tokyo is the same. So Sydney session, which is in East African time, happens from midnight thereabout. So during Sydney session, we had data printed from the Australian country, which retail sales, month on month retail sales is quite a powerful indicator for inflation and CPI, or the prices of goods and services in the economy. And retail sales came out 0.6%, which is higher than the previous and higher than the anticipated. The previous was 0.1%. The anticipated was 0.3%, suggesting that the Australian dollar is gaining strength. We're going to be seeing the effects of that on the charts. Moving on swiftly, we also had during Asian session, China is in that part of the world. I bet you're familiar with the term Asian tigers. China amongst them. During a Chinese session, we had the SINIX manufacturing PMI, which means basically producer manufacturing index, which shows the cost of manufacturing products in that part of the world. The previous was 50.3. The consensus or anticipated was 50.5, and the one which came out was 51.5, suggesting that the Chinese economy is not really doing well in this regard, because the actual came out is actually doing well in this regard because the actual came out slightly above the previous end consensus, suggesting that the Chinese economy is doing good. Beg your pardon. Or well, somebody might ask, what is the relevance of studying this if on the major pairs or cross pairs we don't have the Chinese currency in play, the Chinese yen? This is because we know that the Chinese is the manufacturer of the world and tend to affect global economics. So countries like US and its allies, Australia, Canada, Europe, the Eurozone, used by 20 countries, the Great British Pound, the New Zealand state there, the Japanese state, are going to be looking out for this so that they're able to make their decisions. So it's good to know if the Chinese economy is doing good, these other countries would want to be at par with that. That's why we are looking at it. And then moving on swiftly, today later on during New York session, we have the ISM manufacturing PMI, you see it is coming slightly after the manufacturing PMI from China. So it is, the previous was 46.5, the consensus 47.5. Now, if the data come out which is higher than the previous and the consensus, is going to show us that the US economy is doing better. If it comes out lower than the previous and the consensus, it will be showing us that the US economy is fairly not doing so good. Moving on to Tuesday, we have the Reserve Bank of New Zealand Governor or speech, which is to indicate the economic health of the New Zealand state. We're going to be looking out for that so that it affects the New Zealand based pairs, currency pairs. Moving on to Wednesday, we have the gross domestic product, the GDP, which shows the general economic health of the Australian state, which affect the Australian dollar. And it's quite important to know that the inflation data and the labor data all comes under this. So as to influence the Reserve Bank of Australia data monetary policy. Are they going to cut rates? Are they going to hike rates? Are they going to hold rates? We're going to be looking out for this. Later on Wednesday, we will be having the Chinese state print Caixin Services PMI, which is going to be a follow-up to keep on adjusting on the inflation, the prices of goods and services, in an indicator of in that regard. Remember, this is under the inflation data. Then later we're going to have ADP, and every time you see ADP employment change, what comes into your mind? It can be used as an indicator to show us where possibly NFP is going to print. And you know, NFP is the grand data in the employment segment of the United States. Later we're going to have the SMI services PMI. You see inflation data coming in quite quick, and we also have labor data coming quick. Then on Thursday, we're going to have trade balance month on month for Australia. You see a lot of news coming from Australia, that part of the world, which are going to be using to advantage to understand market direction. Then on Friday, we have the most awaited labor data, which is the non-farmers payroll. Remember, the last one came out at 12K. Quite insignificant, if you ask me. If this data came out the lowest that we have seen in quite a number of months at 12K, only 12 people getting those opportunities, and the one that is anticipated is 183K. See that big margin gap, so we might be experiencing quite a huge volatility in the market, price movement in quite a unique fashion. And basically that is that as we end into the week with the average our hourly earning, which is also a labor data, which will be coming out with NFP. Then later we have Canadian state printing the net change in employment, also an employment data in that part of the world affecting the CAD and employment rate during that time on Friday. That's New York, also from Canada. And then we have lastly the Michigan consumer sentiments, which is to inform inflation numbers to come as per the regulations of the Federal Open Market Committee, which monitors the general well-being of the United States economy. With that said, let's go to the charts and see the printing of data as they come. Good morning, Gabriel. Good morning. It's been a while. Welcome back. Beginning with our usual suspects. Different asset classes, putting our focus nexus at the currency pairs, the currency asset class, moving down to commodities and putting our nexus on gold, and getting to look at major pairs and across pair due to public demand. That's the GBP JPY, and then we move on swiftly as per that. So begin with the Euro USD. That is Euro paired against the United States. You'll notice that the pairs that we're going to begin with has the USD coming in second, or they're called US dollar quote currencies. So if the US dollar is doing good, of course, it's going to be going in a bearish trend. If it's doing bad, it's going to be on a bullish trend. But we see most of them are bearish. So we begin with Euro USD. Let me zoom in. This is the daily time frame. Very nice. On the 4 hours time frame, we see that we're in a clear bear trend. Would like to see major loss being taken out to indicate price movement to the downside, as the data is suggesting as we project this. The US dollar currency has significant power as per the economic data released in the recent past. So to marry fundamental analysis with technical analysis, we want to see price movement to the downside. Now, when the low is taken here at and a close of candle below the 1.04767, we would want to be getting in for sales so as to be in confluence or in agreement with the fundamental analysis printed. However, we see that price is being rejected at the 1.05958. If price comes and closes above this, when we are monitoring economic data, which we do it in regular basis here at HFM, we're going to be updating you. But as it is right now, the US dollar is doing quite good, and that's why we see it's having a field day on the euro pair. And as of this time, 10:15 East African time, we have it being on a bearish trend up to 0.57%. That's quite significant just for the day. Moving on swiftly from GBP USD, the Great British Pound against the United States dollar, we see that we had a fake out at the 1.6 to 121. So this would suggest that the Great British Pound is having a field day on the daily time frame. But overall, you see we are in a downtrend. So what are the market expectations? As data is being printed out, as it is right now, USD is having a field day over the Great British Pound up to negative 0.34%, suggesting that we might see price movement even to the downside. Now, when price comes and closes below the 1.6450, we would consider getting in for sales. Alternatively, for even much more safer entries, when price comes and closes 1.6094, it would be even much more safer to get in for those particular sets. We see that we are getting price rejection at the 1.27478. Now we don't want price to keep moving in that direction to give us confidence on the power of the US economy right now in regards to its peers. Now on the AUD USD, we have been having quite a consolidation, but as it stands, the Australian dollar is getting beat up by the United States USD currency, and as per this now, we are up to 0.26 on a bearish trend, suggesting that this trend might continue. Would want to see price and come and close below the technical area of 0.64 652 to suggest price movement to the downside, so that we get in with confidence. That's a bearish trend for both all types of traders, that is scalpers, day traders, swing and positioning for the long run as it stands. So for USD CHF, Swiss franc, now we're in the USD based currency, so the US dollar coming in fast. We see that price is printing to the upside from a daily time frame. We see a test of the 0.89462, and we see prices moving to the downside, taking out this particular low at 0.881111. Now, what are the expectation in that regard? would want to see price print to the upside, because we know right now the US dollar economy is doing good compared to the Swiss franc. So on a lower time frame, we want to see major highs being taken out. For example, this first one is being taken out as we speak at 0.86472. We want to see even price printing even much more higher to give us much more confidence, and we might have a ride up to the technical area or area of interest at resistance at 0.89448. For USD JPY, on a daily time frame, we see that we are in a clear bearish run, which can be attributed to the positive data that was printed by the Bank of Japan exactly 3 weeks ago, suggesting that the Japanese economy is doing good. Now, a reflection of this by the Japanese yen on the pair, we see it's in a bearish run on the daily time frame. However, going by the bias of the United States currency current dominance over its peers, we see that from the 4 hours we're in a short bullish run. Let's see clearly what's happening in a much more lower time frame. So if you're considering to get in for buys, you want to see major highs being taken out at 151.526 to suggest that entry for buys, but you see that the trend is in a bearish run. As of this morning, the US dollar has recovered up to 0.37, suggesting that we might be seeing a new trend forming, and we see here a change of character. Change of character is where we have price moving in one side in this regard, the bearish trend. Then we have a high taken out, this high over here. So there is a change of character from a bearish trend to an bullish trend. We want to see price printing much higher to indicate to support that narrative. However, if the Japanese yen keep on improving, we would like to see price come and print below the 149.494 to suggest a bearish trend. Moving on swiftly for USD CAD from a daily time frame, we see that we are retesting again the 1.39868 resistance, which now flips to be support, and price is printing even much more higher. We've been experiencing much more volatility on this pair due to the sentiments of the incoming president of United States, Donald Trump, which he has promised his citizens that is going to increase taxes and more regulation for foreign companies, with a focus on Canada, China, and Mexico. Now the Canadian dollar is being affected negatively by this sentiment, so meaning that price would want to see price printing even much more higher as per the expectation. Right now, when we see the price come and print above the 1.40421, would give us much more confidence to get in for the buys. For GBP JPY, we see that price is in a clearish bearish trend, and as of this morning, quite consolidating, which can be seen on a lower time frame. On the 4 hours time frame, we're neither breaking major highs or lows. Would want to see price either break above the 192.2686, or to get for buys, or break below the 190.259, suggesting a bearish trend. Not much data printed from those two states, which is giving us a hard interpretation. You see from the 1 hour time frame, we're in a clear ranging market or consolidating. We want to see price break above one of these. For gold, Now we know that gold is moved by two forces: fundamental analysis, that is economic data from the United States, and number two, it's also moved by geopolitical events. And in the geopolitical world, a lot has been happening both in the Middle East and at the Russian front. But first, we begin from economic data point of view. From the data which is coming out from the United States is suggesting a stronger US dollar, right? That is good to note. But on the flip side, the geopolitical new events, which in this regard I'm speaking about war, battles, anything that triggers in fear into the market would tend to have a much more influence over gold than economic data. It would be correct to say that. So put our focus on the happenings of the world. And right now we understand that the world is at war right now. In the Middle East, we see a mixture of war and peace. Peace in the regard of the Israel war against its neighbors. On the Lebanese front, we had a peace treaty signed last week, which caused the market to be in a small bearish trend, which we experienced here on this Marapusu kind of moving down. Then later we had escalation of war in the Eastern Europe front, where Russia fired on Ukraine's soil. We see price printing to the back or to the upside. Of course, this was a retaliation after Ukraine used US-based weapons. So in short, when we have the war escalating, we will have gold move to the upside. So it's good to be keeping tabs on that, and we shall be updating you here at HFM social media handles. And when there is peace, treaties being signed, less tension, we see gold moving down. Somebody might ask why. The reason is when there is war and geopolitical tension, central banks, investors, retailers like me and you will tend to move to a much more safer haven, and gold has proven to be safer. Okay, then prices of gold will keep going up. Basics of supply and demand. When there is less tension, prices of gold will tend to move in a downward or downtrend. Reason: investors, central banks, retail traders like me and you, we go to other considerably riskier assets like stocks, right? So the price of gold will go down because of less demand. Having understood that, what do we expect on gold today? We observe from that geopolitical point of view, war is escalating. So would want to see major highs being taken out to support that narrative. At the same time, the uncertainty on the war front can also be interpreted to be very risky to trade gold at this time until we have much more geopolitical data coming in to give us much more confidence. But for the guys who are getting in on a bullish run, would be much more considerably safer than the ones getting in for a bearish trend, because we know that in the Eastern Front, the war is escalating past the 24 hours. We'll be able to check on that tomorrow as we move forward. Now, a disclaimer: this is by any chance not financial advice. This is purely for information purposes, so kindly do your due diligence. And hopefully see you tomorrow, the same place, the same time, to do things the same way that has proven profitable over a long period of time. My name is Kefa Eric. Cheers, God bless, and have a good